Okay, so today we talk about risk of material misstatement, how to write that in CV exam, as well as maybe assurance elective exam or even Core 1, because it's very frequently tested topics starting from CPA, starting from Core 1, I'll say, and then also materiality and approach. And then we also talk about, maybe if we have time, we also talk a little bit more about the procedures, how to write assurance procedures. So first of all, the risk assessment, audit risk. This this formula may not be arithmetically correct, but you just know the logic behind it. So audit risk is inherent risk multiplied by control risk, and then multiplied by detection risk. And the inherent risk multiplied by control risk, that's called risk of material misstatement. That is what we write in our exam paper. It is saying how much what are the risk factors that may lead to the financial statement being materially misstated. That is the risk of material misstatement. So you can see from this formula, I told you it is not actually arithmetic, but there are two types of risk factors, inherent risk and control risk. That's what you should write on your risk on your exam paper. But I don't think it's necessary for you to do two lists. I know some people do and some CPA solutions do, but I think you just combine them all. Like you just list all the risk factors, no matter it is inherent risk or control risk. You just list them all, then that's fine. You don't have to distinguish them between inherent risk or control risk. There's no mark for that distinguishment, for that classification. There's no mark for that. But it's good for you to know, because if you know there are inherent risk and control risk, then it's going to help you to identify the risk factors from your case. This is the risk of material misstatement. So if the audit risk is fixed, I'm going to quantify it. It's not like arithmetically 100% correct. I'll just quantify it for you to fully understand. What do I mean by audit risk is fixed? Like I'll say I want my audit risk is 5%. So if I do if I do 100 audit engagements, I only want to be sued for maximum of 5 times. That's what I say audit risk is 5%. I know it sounds ridiculous. I just want you to fully understand what audit risk is, what audit risk means. So audit risk is fixed. And then if the RMM is high, that means the detection risk is low. So this formula is not very arithmetically correct. You just understand the logic behind it. So audit risk is fixed. If the RMM is high, then that means the detection risk must be low. If the detection risk low, means the auditor would have to do more procedures to detect material misstatement to lower the detection risk. You know what I mean. RMM is high, that means auditor would like the detection risk to be low. So auditor have to do more work.
Makes sense.
Yeah, and then if the RMM is low, then the detection risk must be high because audit risk is fixed. If the RMM is low, then detection risk is high. Then that means auditor can accept a higher detection risk. That means auditor can do less work for this audit engagement. That makes sense, right?
Yep.
Actually, in your CV case writing, it's not going to be this complicated. They'll just let you to write the RMM, risk of material misstatement. So it sounds very simple, but sometimes candidates don't get marks. Sometimes candidates get RC or even NC. So the key point is you have to fill in the logic gap. What is the logic gap? That is the bridge, which means the implication between the risk factor and the conclusion. So the conclusion is RMM is increased, RMM is decreased, right? Conclusion is the risk of material, the risk that this financial.
好多事儿做，我得休息一天。我觉得自己情绪
Okay, so the conclusion, if the conclusion is RMM is increased, then that means like the risk that this financial statement is material misstated increased. If RMM decreased, that means because of this risk factor, the risk that this financial statement is materially misstated is decreased. That is the conclusion. So you have to build a bridge, which is the implication between the risk factor and the conclusion, which is RMM increased or decreased. So what is building the bridge? I'll say you write some kind of implication. You ask yourself, so what, when you write the case? You know what I mean? Ask yourself, so what? So, Harp, do you watch like thriller movies?
Yep.
What kind of thriller movies do you watch? Asian,
Yeah, Asian movie.
South American, do you watch those?
Not much. Yeah.
No, you just watch Asian.
Yep.
Oh, okay. So if you use the logic behind Asian thriller movies, it's very likely that you won't pass the CPA exam. So here's the difference. In Asian thriller movie, it's all your imagination. It's not very obvious. It just leave big gap in the logic, and then use your imagination to fill in the gap. But in South American thriller movie, it is quite obvious. Like they have big monster with very bloody monster, big mouth, big teeth, horrifying teeth, and gross discharge. You know what I mean? It's pretty obvious. Oh, that's the ghost. Oh, that's the monster. Oh, it's so terrifying. Oh, I'm so scared. So that is the American thriller movies. What about Asian thriller movie? What about the thriller movie Chinese people made or like Japanese people made? It's this whole, just use your imagination. So all of a sudden, the door opened. There's nothing behind it. And then you use your imagination to jump to the conclusion that there's a ghost. So there's a big logic gap behind the whole thing, right? The door opened by itself. That's the factor. That's the fact you see. And you just jump to the conclusion there is a ghost. The door was opened by the ghost. Then you scared yourself. You know, there's a logic gap behind, like in between. So you need to fill in the logic gap. So in your CP case writing, how do you fill in the logic gap like this? You should say the door opened itself, but the door is a non-living object and it won't open by itself. There must be an invisible force pushing the door. Then there's your conclusion. There is a ghost behind the door. Making sense?
Yep.
Yeah. So if you do your best to fill in the logic gap, then you're gonna make something that doesn't even make sense and make it sound very solid. So see, this is Brady, my favorite. It's Brady. I know he like cheated. He's not a very faithful person. He cheated multiple times. But anyway, so this is Brady. You know Brady, right? And then
Yep.
I'll say Brady is very handsome. So Brady get a good job. You filled it. It doesn't sound logical, but you just filled in the logic gap, and then it's gonna make sense. Brady is very handsome, so he gets lots of support from his coworkers and superiors, especially female, because female love him. He's just so pretty. Then he gets good work. You filled in the logic gap. You know what I mean?
Yep.
Just ask yourself, so what? Now let's go back to the real CV risk of material misstatement. When you don't have to classify your risk factors in your exam. I'm just giving you examples. So these are the factors. These are the laundry list that you may possibly identify during your exam. You just say there are complex accounting policies, complex accounting calculations, or valuation estimates that need professional judgment, such as blah blah blah. Fill in your case fact, and then how does that gonna lead to risk of material misstatement increase? How that's gonna make your financial statement materially misstated? Why? Because the transactions are complex. Because the contracts are complex. Complicated things make people make errors because it's so complicated. So people make errors. People make mistakes. Therefore, RMMs increase, right? And then we have like operations in multiple locations because we have operations in multiple locations so that the financial reporting and the supervisory process and the system migration It's more complex. More complicated things make people make mistake. Therefore, material misstatement. Therefore, the financial statement may be material misstated. Correct?
Yep.
Just ask yourself, so what? So the blue part is the risk factor, is the case fact. And then the red things is the filling the logic gap. Ask yourself, so what? And then you get to the conclusion. Business operation is subject to complex or changing laws or regulations. Still, more complexities, so more chances of errors. Changes in technology or regulations, yeah, more complexities, so more chances of errors. Therefore, more likely that the financial statement may be materially misstated. This is transactional, the risk factors that are transactional. What about personnel? So what about like key accounting personnel change, like controller goes on maternity leave, like the CFO left, like organizational changes. For example, in the Fancy case, we eliminate Fancy is a jewelry store, and then we eliminate all the assistant managers across all the stores. So those are major restructuring, major organizational changes. And especially if there are major changes in the accounting personnel in the finance department. So the new accounting person, the new controller, the new CFO may not be familiar. I'm talking about the implication right now. I'm filling in the logic gap right now. So case fact, I told you the blue part is the case fact. So the implication is that the new CFO, the new controller, may not be familiar with the operations, may not be familiar with the accounting process, or there's major restructuring going on, so more complexity. There's major modification of the accounting software, so the accounting personnel, the implication is that the accounting personnel may not be familiar with the new software, and then they tend to make mistake. So you filled in the logic gap, and then you lead to the conclusion that RMM is increased, correct? And then integrity, because assets that are susceptible to theft, for example, jewelry or like cash, because those assets are vulnerable for asset misappropriation. Everybody like cash, everybody like jewelry. People tend to steal them. And then after they steal the assets, what do? They manipulate the financial reporting records to cover up the theft, to cover up the crime, right? So financial statement may be materially misstated, right? Or there's economic downturn and there's pressure from the shareholders, there's pressure from the bank, so that the management may be pressured to show, now I'm talking about the implication. This is very important. So the case fact is economic conditions impact the business negatively. So the risk factor is that the profits have been in the loss position for so many years, and the risk factor may be the shareholders emphasize stress on the return of equity. So these are the risk factors, and the implication is management may be stressed, may be pressured to show good financial performance. Therefore, they are biased to manipulate financial records or adopt aggressive financial recording strategies. Then you lead to that, like the RMMs increased. Correct? Making sense?
Yes.
Okay, so the very important thing is building the logic gap. Okay.
Yeah. So basically, in the implication, we are just trying to say like why this is the risk, right?
Trying to say why this may lead to the financial statement being materially misstated. That's
Oh, okay. Okay. So
you.
how basically it can impact the financial statements or the numbers?
Yes, you have to land there why the financial statement may be materially misstated. Let me give you an explain. Like for example, the company has been in a loss position for so many years. Then why do you think the financial statement may be materially misstated? If they are in a loss position, then the financial statement clearly and correctly show the loss, where the loss is, and how much loss the company is incurring, then is the financial statement materially misstated? No, it is not. So I want you to fill in the logic gap. Why the company has been in a loss position for so many years? Then why do you think this may lead to the financial statement being materially misstated? So what is the logic gap? What is the implication in between? The implication is that it's like the financial statements are not looking pretty and the management are not looking pretty. They are pressured to show good financial performance to satisfy the shareholders. I'm saying a lot, but you can be more brave in your case, right? You can be more concise. The management are just pressured to show good financial performance. Otherwise, they'll be fired. Therefore, they may manipulate the financial records, right? They may tend to manipulate the financial records. Then RMM is increased. That's where you land.
Basically, that's the management bias or what?
Yeah, the management bias,
Yeah.
right? Management bias is the implication, is the logic gap behind the whole thing, correct?
Okay.
Yeah. And then, there's another important thing. Sometimes the case tests you for WIR, weakness implication recommendation. So it's another separate AO, like WIR. It'll ask you about some internal control weaknesses. So in the RMM section, it's very common to say several internal control weaknesses have been identified. That means the internal control of this company cannot be relied upon. Therefore, the financial statement may be materially misstated. So
Okay.
that's a very common one. Okay. Okay. And then, yeah, so this is the example I just gave you. For the control risk, you just ask, does the control system exist? Or the control system is effective or not? So if there's a separate assurance AO asking you to identify internal control weaknesses, then it's pretty clear that you have identified several internal control weaknesses so that the control risk is high and then RMM is increased. Yeah, it's like several internal control weaknesses have been identified, and then internal control system is ineffective, cannot be relied upon. So the control risk is high, RMM is increased. You can just memorize those things. These are the case writing templates I give you. Okay.
And also, Angela, I think I was reading a case before. So I think in that case, I think as you have mentioned, we need not to mention if this is a inherent risk or if this is a control risk, because in that I think case, so I think it was asked that you have to identify the risks uh, at your financial statement level. I think there are two levels of risk at the financial statement level, and also I think at the transactional level.
Yeah.
Yeah, I think they just asked, I think in that manner, if we need to write. So is it like
Oh,
enough,
so
or it's
okay.
not very common?
So yeah, at the overall financial statement level is it's called the RMM, risk of material misstatement, and that's most commonly tested in your CV exam. Yeah.
Okay.
And then it's a part of a preliminary planning memo. So preliminary planning memo include the risk of material misstatement at the overall financial statement level and the materiality and the approach. And then I'll say for the assertion risk
Oh, yeah,
is
for
more
sure. Got it.
related. Assertion risk is more related to certain accounts and it's more related to certain transactions. So if they ask you to identify the assertion risk, I think it showed up once in Fancy, ask you to identify the assertion risk related to inventory or whatever. I can't recall, but yeah, I know it has been tested. But if you know how to write good assurance procedure, then I'm sure you'll get that AO competent.
Okay.
Yeah. So now we are talking about risk on material misstatement at the overall financial statement level.